Evening, everybody. Martin's going to join me, who's our CFO, so we'll take part in the presentation together. This presentation follows, if you like, our annual results that were released in January. It's available on our PLC website. Our disclaimer comes a little bit quicker. I want to, if you like, tell you what we do, for those that don't know us. The investment case, if you like, for Ramsdens is we're often considered a defensive stock. I would think we're recession neutral. I'll explain that through. We're a small business. We make cash. We invest it to grow the business, and we pay out a dividend to shareholders. It's as simple as that. We're just trying to get bigger. Yeah. So, foreign currency exchange. If you want to go to Benidorm or you want to go to Dubai, we'll sell you euros or dirhams. That's the bulk of it. We will launch a currency card this year, a new one, a multi-currency card, and we do international payments through a third party, but basically it is the cash that we sell you to go on holiday with. The average transaction, the often risk is cash to card. That must be a risk for you. The average cash taken by our customers pre-COVID was £400 and something, 407. It's about 460 something now. So the actual cash that people are taking on holiday has gone despite the increased use of cash in the UK. People use it as a budgeting tool. It helps them, and then obviously they use either a card or they use their main current account abroad. Pawnbroking, small sum, average loan. I think it's about £300 now, just under £300. Our median loan is only £150, so it's a lot of little loans helping people for whatever reason they need cash for. That might be for food on the table, it might be to buy a property, it might be to buy a business. The loans in stock at the moment go from about £10 to £100,000. So we lend all sorts. It's not just, if you like, the bottom end of the market, which people often think it is. Average interest rate's about 8.9%. It ranges from 9.9 down to 1.9. That is per month. Yeah. Depending on the way that you look at it, on a lifetime basis, it's about 83% of the people repay their loans. 17% don't. Half the people that don't are probably selling it at the outset and just taking an option via the loan because there's no different consequences to them. Their only consequence is they lose the goods. Purchase of precious metals. So if you have an unwanted engagement ring because it didn't work out, we will buy it from you and we will resell that. If we actually melt it for its intrinsic value, it goes through purchase of precious metals. If we sell it in our stores, it goes through jewellery retail. Within our stores, jewellery retail, we also sell new jewellery and we sell premium watches. Other services, Western Union and cheque cashing. We don't do high-cost short-term credit, so the FCA regulatory piece for ourselves is just limited to pawnbroking, and it's quite well understood what the service is, very few complaints. People don't pay us back, we sell you goods. In the bottom half, we've been on market now about 6 years next week, and you can see the trajectory that we had. The year end has changed in the middle, that is all COVID related. We couldn't get an audit done on the 31st of March, 8 days after the country shut down. So we changed our year end, and then obviously you can see that we were still profitable during COVID. And then we've come back out and we're now back where we were. So the story that I tell is you get to February 20, we're about to release our annual results in March 20, and I'm thinking record profits. I have a pipeline of new stores. Everything is good in the world. 6 weeks later, I've got 160 stores closed and 692 staff furloughed. Everything is not good in the world. But we were on a trajectory. And we think we've had our hiatus and we're back now and we're now ready to grow again. Current trading, we put out some quarter one performance numbers that still said everything was well in the world. We've had a good quarter to start this current year off. We'll go through the financial review with Martin. We've put in a column for 12 months 20, so you've actually got a comparison of FY22 versus the 12 months 20 pre-COVID. All yours.
Thanks, Peter. I'll rifle through this. I'm probably more interested in some of the the forward-looking growth strategy, but we'll very quickly run through how we make our money and how the business is performing. So as Peter mentioned, COVID came along and actually we had to close the stores. We reopened them quite quickly, but the lack of foreign travel really impacted revenue, particularly in the 6 months to September 20 and into FY21 as well. So FY22 is the year to September 22. And in that period, things got better in the second half of the year. So as we started that year in October 21, we were still in the midst of COVID. We still had the Omicron variant, particularly across the festive period. So the various segments have come back at a different rate, which we'll see shortly on the next slide. But overall, the business now, revenue 66.1 million, that's 11% ahead of where we were pre-pandemic. So we are back predominantly to where we were. The gross profit percentage is reduced slightly. That's the mix of services that we offer. Because of that transition back, they've transitioned back at different rates. But the business now very profitable, back to the level of profitability we were before, 8.3 million, and that's 20.9 pence EPS. And off the back of that, we've been able to pay a dividend of 9 pence per share in the period. So if we drill into that into a little more detail, really just to touch very quickly on the 4 segments. So foreign currency, as Peter said, this is a sale of currency notes predominantly. What we've seen here is the amount of travel that people have had in the last 12 months has gradually got better. See, the start of the period, 30% volume we saw, and at the end of the period we saw 70%. So still not back, still substantially not back to where we were. Despite that, the market for currency has actually changed slightly. So we were probably around 1.8% when we sold a euro through a store to a customer. Because the volume reduced substantially, the market increased across the board. So our margin has moved out to closer to 2.7, 2.8%. And still we are the cheapest by far on the high street. So the post office is probably the biggest competitor in terms of the cash market. And even pre-COVID, they were probably around 3 to 3.5% on a euro note. So that disruption that we've had over many years to become the price competition in currency, we've been able to take more margin as volumes have reduced. And there's been no pressure to increase that as the volumes have started to return. So you can see there FX gross profit for the period FY22, 12.7 million, almost back to where we were pre-pandemic, despite only 70% volume returning, and that was at the end of the period. So what you'll see in the current year is that run rate continue and a step forward again into the current year. Pawnbroking, again, during COVID, what we saw is people paid us back the same way you saw this in credit cards or in other types of consumer credit. People had less ability to spend money during the pandemic, and therefore our customers paid our loans back, and our loan book reduced. And you can see at the bottom there, the pawnbroking loan book at September 21 was 6.1 million. Pre-pandemic, it was 7.8 million. So basically, that reduction, you've seen that come through the P&L in pawnbroking as well. At the end of the year, the pawnbroking loan book was 8.6 million. And what we said in the RNS actually is if you go forward to December to the end of the year, it was 9.1 million. So the demand for lending has continued to increase. The run rate, therefore, on that income is much higher now that that loan book will be there for the full 12 months. So that if you look here, the gross profit for FY22 at 7.5 million is actually much lower than the 9 million for pre-pandemic. The loan book is now ahead of that. So you'll see that growth to come through the pawnbroking segment in the next 12 months. Now, jewellery retail has been the segment we've invested the most in. So as a business, we've got better and better at selling jewellery over the last probably 5 or 6 years. You can see here, despite the pandemic, we've increased retail jewellery sales by about 48% in the last 12 months. And if you go back 2 years, it's actually more than double it was. And that's on a very similar number of stores. So we've put a lot more retail stock into our stores. We've invested heavily in the window displays that we have. We've moved some stores. There's a good example of Newcastle. We were on Arterial Road, now we're in Eldon Square in the prime centre of Newcastle. And therefore, we're getting better and better at selling jewellery retail, and that's been a real opportunity. It remains a big opportunity for this business to continue to grow, despite headwinds into discretionary spending. Precious metals, as Peter said, we buy gold and we melt it. The volume that we bought was impacted by the pandemic. So at the beginning of FY22, we were probably 80% volume of our normal gold buying. We've seen that improve through the year, and the run rate for the current year, therefore, is better than it was last year. So every single one of our biggest 4 segments will grow this year because of those improvements in the marketplace we've seen. So very quickly onto the cash flow. The business is very, very cash generative. Our model is you open the store, you pay your CapEx, and then the cash profit of the store comes back through. So our general philosophy is half of what we make, we pay out as dividend. The other half we invest to either grow the store estate or potentially grow the inventory or grow the loan book in terms of working capital. But that cash generation, the history of cash generation is very clear from our results. We have bought our head office in the period, so the CapEx is slightly higher. But that model is tried and tested. Touch very quickly on the balance sheet. So as I mentioned, we've got big step forward in retail stock in the period. That's over £7 million. That inventory is very, very strong asset class. So we buy jewellery from the public, and that jewellery often is lower than its intrinsic value. So that's very, very, we could melt that gold down and actually return a higher value than it's booked in our balance sheet at. We buy wholesale jewellery as well from our manufacturers, and that is probably 80% backed by the intrinsic value of the metal. And then we also have premium watches, so Rolex watch, for instance. And again, there's a very strong wholesale market for that as well as the retail market. So that 22.7 million of inventory has a very, very strong resale value. The trade receivables is actually the pawnbroking loan book. And again, that's backed by the security of jewellery and watches. The cash in the balance sheet includes the currency in our till. So often we get asked why we've got so much cash, but there's a really big cash cycle in selling currency. £10 million of that cash is currency. It's not sterling. That fluctuates seasonally through the year. So actually, if you look at how much currency we need in the winter, that's probably around 5 million. And then into the summer, that jumps to about 10 million. And that's why we use a RCF facility to fund that difference in the currency stock. So in the winter, in the summer, we draw, at the year end there, we drew 6.5 million on that facility. But in the winter, we pay it back. So today, we've got no debt drawn on that facility. It's a very, very efficient use of that working capital facility. But that balance sheet, 41.8 million, has grown despite COVID. It's grown through that period and gives us a really solid position to grow the business from. Hand back to Peter, who'll talk you through our tried and tested growth strategy.
So when we came to market, we had a simple growth strategy. Hasn't changed. So 6 years later, it's still the same strategy. Drive growth from the core estate. We've always wanted to try and do things better. How can we improve our retail? How can we improve our FX? How can we improve our pawnbroking? Expand the store estate. It's just more Ramsdens stores. Ample opportunity. So we have 158 as at today, 159 when Maidstone opens later this month. There are 300 towns in the UK with 30,000 people or more. London counts as one with 8 million people. So there is ample opportunity to grow. And I have a very good store in Dalkeith, and another very good store in Musselburgh. And not a lot of people in those towns, so we can probably operate in most places. Grow online. Our store estate only covers about 25% of the UK population. So can we sell to other people? And are there any consolidation opportunities? We've always open-minded on that, and we bought one during the year in Boscombe, which is actually near Bournemouth. I had to look it up too. And then we underpin everything with the ESG policies. So, driving growth from the core estate. I said the 4 key services that are there. That's Clenethley. Clenethley recently relocated from the high street into the shopping centre, and you still get, despite this might be a failing, but 10 years later, people are saying, "I didn't know you were here." And that's had a very good Christmas for retail, where in the other location didn't do a lot. So we have that opportunity to relocate where appropriate. In the back of our presentation or online, you'll see that we have quite a flexible estate. Our average lease term is less than 2.5 years. So if a town centre is, let's say its opportunity is a bit mixed, because some towns are not very good at the moment with empty shops, we'll take a flexible lease, might pay slightly more for that, but then be able to relocate it if we need to. And we've got the cash resources to develop new stores in the right location. Moving on to the store estate, I mentioned the opportunity. You can see in the map that will appear shortly that we have pins very grouply tight together in the northeast, northwest, and across Scotland. And there's a couple of stores. So Bootle, outside of Liverpool, Bradford Broadway, city centre, slightly different approach. We actually have 2 stores in the centre of Bradford. So we can mix and match the model. We're going to open 12 stores in FY23. I've got 4 of them already open. Maidstone will be the 5th, and I'm confident that we'll deliver the other 7, if not more, because the opportunities are there.
Roughly, what's the opening cost of a relocation?
It's about 120 grand's worth of capex, and it's probably another 130 grand worth of working capital, of which some of that is cash. Grow online. Invest in our online business quite heavily. We have refreshed the website in October, and you can see the growth that we have had year on year in that top right hand graph. Massive opportunity for us. We are still only scratching the surface, but we are improving, half year on half year. You can see there that the Rolex page, I think we've divulged, we're close to selling about £10 million worth of watches a year now, and that's growing. So strong growth online. In terms of website, there will be a new website for our foreign currency, pawnbroking and gold buying activities. Currently they're under Ramsdens for cash. The journey for the customer is a bit complicated, a bit clunky, so we're trying to separate that out, and then we can focus on the SEO to promote those services. So there's growth there for us. And because we've got some cash resources, we can buy small businesses, medium-sized business in our industry. Pawnbroking sector is quite small. There are only 121 National Pawnbroking Association members, and if you want to sell your business, you make 2 phone calls, one's to me, and the second one is to Chris at H&T. They're the 2 buyers for the business, so it's quite a captive market. We bought Boscombe. Nick and Sarah, 3rd generation business, wanted to retire. We made them a good offer, a simple offer, and we were able to buy the business. And that's been a very good acquisition for us. Underpinning it through ESG. We think we've got high governance. We're FCA authorised, AIM listed. We've got to have good governance. As a pawnbroker, you've got to do things right. Trust me, you're in the spotlight, as the press will see. So we try and do things right all the time. We could claim to be very green because we recycle metals that don't have to be mined, but we actually take a responsible attitude to it. We want to use less electricity. We want to recycle where we can, so we try and be good citizens. That's the plank that sits within our environment. Socially, I want to look after my staff. They've had a good pay rise last year, they've had a good pay rise this year. It's the conversations that they have with the customers that are going to grow the business. That's part of that development. And we give back to charity where we can. So that's us. There's more details in the presentation. Happy to take any questions.
Excellent. Thanks, Peter. So I can see already we've got a question at the back there, and then we'll see who else. I think I'm right in saying you're AIM listed, which
Yes.
has advantages for private shareholders from a tax perspective.
Yeah,
Are
absolutely.
you going to stay there, or have you got ambitions to get on the main market?
Oh, we're far too small to get on the main market, so let's continue to grow it and see where it goes. But no, we're AIM listed and we're inheritance tax qualifying.
We've got another question just here.
You said you've got 158 stores nationwide.
Yep.
How are they forward-facing to the public? Is it pawnbroking? Is it retail? Is it retail jewellery? Is it your currency exchange? There's all pictures just saying pawnbrokers. Is each 158 split into 4 different?
No, every store's full service.
Okay.
So I have a kiosk at Teesside Airport, and that's got pawnbroking loan book, a small one. But you'd think its main service would be currency. All services in all stores, but clearly we have focuses that the store that you saw for Bradford is very retail focused and very FX focused given where it is, but it does do pawnbroking. It's already doing pawnbroking after 3 months. We have other stores that are more traditional locations, let's say suburban, that have got a large loan book and if you like a cash cow. They've got a large loan book, interest is generated, and it just rolls off cash every year with less FX because it's in a suburban location, but it does a little bit of retail to its passing trade.
Another question just here.
Hi, can you see what's stocks in each store via the web, via online access?
Yeah, so if you take our watch stock, we have about 1,900 watches in stock at this moment in time. They're all available online. Some stores have 3 in, and some stores have about 65, 70 watches in stock. So the staff are obviously trained. They've got the iPads. They can go through the stock with the customer who's interested in buying, any of the watches that are online.
That would cover bicycles, etc. You'd have in there as well?
No, we don't do the bicycles, the phones, the iPads, the accordions, whatever. No. We did buy a business in Edinburgh, Duncanson Edwards, and if the item's been in before, we'll lend against on it, but I'm not a fan of guitars and all that.
Do you have any other questions? There's one right in front there.
You mentioned an airport there. In terms of your FX, do you have many airports, or is the cost?
Nah, it's a local one in Teesside Airport. The airport. If you ever buy your currency at the airport, just don't. Unless it's at Teesside, just don't. The margins they make because you're a last-minute purchaser are ridiculous. That's why we generally don't. But Teesside Airport, we're struggling for provision. It's our local airport. It's recently gone through a lot of news locally, so we were willing to pitch up, and it's a bit of an advertisement as opposed to a fully fledged store, let's say.